watching Ask Profit. I'm Mahima Vachrajani and with me is Anushi Vakharia, where an important clarification is coming in. Earlier today we reported that the Sumitomo Mitsui may buy 24% stake in Yes Bank. My colleague Vishwanath Nair now learns that the former may not have necessary license. Vishy, what are you picking up exactly?
Right, Mahima. So the conversation in the morning was about Sumitomo Mitsui in talks with State Bank of India to buy up to 24% stake in Yes Bank, and that transaction, the discussions around that transaction are still ongoing. However, Sumitomo Mitsui Banking Corporation requires a specific approval from the Reserve Bank of India to action this transaction. Certain media reports had earlier suggested that the RBI seems to have given a verbal assurance to Sumitomo in this case. Now sources, of course, are telling us that Sumitomo has not even made an application to the RBI, so the question of giving any verbal assurance does not arise. Remember that for any such transaction where basically an investor wants to buy anything more than 4.99% in a bank, requires a specific clearance by the RBI. And that specific clearance is only valid up to 9.99% stake. Anything above that requires an additional clearance from the Reserve Bank of India, which goes over and above the normal course of business. So definitely, if they want to buy 24% stake from State Bank of India in Yes Bank, Sumitomo Mitsui Banking Corporation will require an RBI clearance. An application has not yet been made. In case an application is made, the Reserve Bank of India will review it on its merits and then take a final call. Those things are still sometime in the future. At this point in time, a conversation with State Bank of India is ongoing. And once a clarity on the deal is reached, an application will be made to the Reserve Bank of India, after which the RBI will give its approval or decline the offer altogether. That we'll find out later when that happens. But as things stand, the RBI has not yet received any kind of application from Sumitomo Mitsui Banking Corporation, and that is still awaited.
Okay, Vishy, thank you for breaking that down for us, and viewers will keep you updated as to what happens next for the entire conversation around Yes Bank. But with that, let's also shift focus to Indian Overseas Bank, and Harsh is also joining us for this particular conversation. Harsh, first of all, take us through how the earnings were, because from what I understand, it was a healthy quarter-on-quarter growth, but there was an increase in new slippages is what I understand.
Yes, there was. So in fact, the slippage ratio has gone up sharply, and maybe something around that is what we'll probably quiz management on. The other pieces with regard to growth. Growth was extremely healthy for the bank this time around, 5% sequential. So that's the one key positive. But the other one, the one piece which I believe also holds relevance at this point is its exposure to Bhushan Steel. Let's go across. We have with us Ajay Kumar Srivastava, MD and CEO at Indian Overseas Bank, joining us. Welcome, sir. Sir, let me start off with the larger question with regard to Bhushan Steel and your exposure there. Talk to us about the quantum. How are you going to account for the reversal, if any, and what the impact is going to be like from a short-term as well as from a medium-term perspective?
So around 2,000 crores of exposure was there for Indian Overseas Bank in Bhushan. And percentage terms, it was slightly lower than 4%. And as a part of that resolution process in 2020-21, we got 760 crores almost, lower than almost 800 crores. We got, which has already been factored in, and that has happened with all the banks of 19,000 crores. The recent decision by Supreme Court, that decision is being discussed and analyzed at all levels. All a big consortium of banks are there, and the best way out, based on the discussions with the legal experts also, as a consortium, of course, we'll move ahead. That is one part of it. And the second part of it is that the 760 crores which we got in 2020-21, in the worst case scenario, if let us assume that we are supposed to return it back, I can say from IOB perspective that the balance sheet is so strong, it's so resilient that 760 crores of refund also will be handled very, very comfortably, and there will not be any adverse impact on the balance sheet of the bank, whether it is short term medium term or long term.
Understood, sir. Sir, so just to kind of get clarity on this, you had a 760 crore recovery approximately, which came through in 2021. Now, if at all this were to get reversed, you may have to reverse this recovery as well, and therefore you'll have to provide for 760 crore temporarily. Of course, the benefit being that Bhushan Steel is now a fully functional asset for you, and therefore likely you may actually recover much more and your haircut will be much lower. Is that broadly the correct understanding in the way in which this will work? And if the reversal were to happen, will it happen in Q1 FY26 or Q2?
Yes, that is also one way to look at it, because yes, the asset is in much better condition, and of course valuation can be more. But we do not know that whether that situation will come or not. As of today, where we stand, I have to say that 760 crores is not a big amount which cannot be handled, and whether it is supposed to be required 100% provision in Q1 or Q2 or Q3, we are having sufficient cushion to address that.
Understood. Sir, the other concern, at least in this quarter, was the slightly elevated slippages. What's causing that? Do you expect that to sustain, or do you expect that to taper sharply? Because otherwise slippages have been absolutely flat, right?
Exactly. The same story was there for Q4 also, except for one big account. And that is already in the public domain. Everyone knows about that. That account was MTNL. For IOB, the outstanding was 2,330 crores, which slipped in the Q4. And because of that, you can see the number, slippage ratio number or slippage number is touching around 3,500 crores. But if you take that MTNL out, that is one of account, then total slippage for the entire year is 1,200 crores, as against 1,500 crores of the previous year. So slippage control, in fact, it has improved over last year and quarter on quarter. Our slippage ratio of 0.16, 0.17, we have been consistently maintaining it, and that is one of the best in the system. So it was a one-off incident only. And that too also, I'll take one more minute, that too also, entire exposure of MTNL 2,330 crores, we have 100% provided for. And we have ensured that GNPA and NPA ratios are not adversely impacted. And having provided 2,330 crores also, despite that, we have booked the highest ever net profit of 1,051 crores in this quarter.
Okay, understood. Sir, with regard to two pieces, therefore, on the positive side this time around, you've done 14% growth this year, 5% sequential in Q4, so extremely strong, and congratulations on that. The other pieces, margins have gotten better. Can you contextualize these numbers for us from an FY26 perspective? What's the expectation like?
Yeah, the guidance and what we are looking at for the current financial year is that we will like to grow at the same level as far as credit is concerned, around 13-14% of growth we are looking at. And we are pretty sure that we will be able to achieve that also. The margin, the NIM, which is 3.58% as on March 25, I can say that there will be some pressure on margin going forward because of reduction in repo rate. And having said that, we have our strategies in place, and I am pretty confident that we'll be able to maintain NIM at around 3.4 to 3.45. Between 3.4 to 3.5, we should be able to maintain by the year end.
Okay, thank you so much, Mr. Srivastava, for coming in, speaking with us, and giving us that perspective. Now, the interesting part about this is the fact that you may have to see a reversal of around 760 odd crore, which was what was actually reversed or recovered in 2021. So that's the interesting piece to keep in mind, and the growth will hold up for Indian Overseas Bank. Back to you, Mahima.
Absolutely, and in fact, let's pull up the stock and see what it's doing in trade today. It's down by about 2%. So the street probably is not very convinced with the kind of results it's come out with, but currently the stock is trading at its day's low point. All right, with that, let's also welcome in our guest for the day, Swati Hotkar, AVP Technical Research at Nirmal Bang, and Astha Jain, Senior Research Analyst at HEM Securities, joining us now. Welcome to both of you and a very good morning to you. I'll take up the first question. Anand is writing in from Qatar. He's holding 250 odd shares of Astral, bought at 750 per share, and wants to know whether he should currently hold or exit at the current level. Swati, I'll quickly come to you on this one. What are the charts indicating?
The chart as of now, we are witnessing a selling pressure into this particular counters, but I believe that currently the counter is trading in the oversold zone. So, and we are witnessing a very strong consolidation within the range of 1280 to 1350, 1370 levels. Up to within that level, we are witnessing some sort of a consolidation. Any breakout of the consolidation phase on the higher side will witness to some sort of a positive momentums, which might take a counter towards to 1450 to 1500 levels upside. I will not suggest to book the losses at the current market price, but definitely you can hold on. Downside, it has a very good support at around 1270. By keeping that as stop loss, you can hold on your long position for immediate target of first target will be a 1450, and then 1500 levels can be seen. So it's hold from my end.
Okay, so 1450 to 1500 is the target that you're looking for Astral Limited. But the next question is from Arya from Goa, and he wants to understand more about Ola Electric. He's bought about 261 shares, and this is at a price of 121 that we are looking at. Currently facing a loss of around 19,000. Asta, let me come to you on this view on this one. What's your view on Ola Electric?
So, hi, good morning to all of you. Talking about Ola Electric counter, we are not very much convinced about this fundamentals of this company, because we know that the kind of market share they are now losing. Because today also we have seen one of their peer group got listed, that is Ether Energy, and it was on my expectation, listing was on my expectation. We were not very much optimistic because there are 2-3 factors. First of all, competitive intensity is high in the EV space, being Bajaj Auto being the number one, because Bajaj Chetak is holding a very, very strong attraction in the market. Second is by TVS Motor, because in fact their products are also very, very competitive. Electric vehicles I'm talking about right now, not IC scooters, but in fact electric vehicles of these two major companies are also getting very strong traction in the market, much higher than Ola as well as Ather. So I mean competitive intensity is high. We have seen they are into losses, and going ahead also we believe it is our ground check reports that Honda is also coming out with a very good product by the June or July end. So I think again all these product launches with the major auto companies definitely will give a high competition to them. Along with that, the kind of fundamental news we are getting on this counter is also not very convincing. So we believe it's better to book partial losses into this counter and remain invested partially, but we are not very much convinced. So we are recommending to book partial losses into this counter.
Okay, book partial losses in Ola Electric is the view coming in from Astha, where fundamentals are of course concerned for the company. All right, before we go on to the next query, we have an exclusive source telling NDTV Profit that India has proposed zero tariffs on steel, auto parts and pharma to boost US trade. But will the quota-based probably offer balance between the $41 billion surplus that we already have? Let's bring in Rishabh to bring us more details on that. Rishabh, what are you picking up?
Right. What we're hearing is the fact that India has proposed zero for zero tariffs on at least 3 product lines, at least 3 sectors as we know so far. The 3 are steel and steel components. We're seeing auto components as well as pharmaceuticals being covered in this zero for zero tariff strategy. Now, what is also interesting is that this is currently in talks. There is no confirmation or approval of this from the American side. It is an offer made from the US, from the Indian side currently. What we're also seeing is the fact that these zero tariffs will apply only to a certain amount of imports or a certain quantity of imports, and after that there will be after that threshold is exceeded, these tariffs, regular tariffs will apply, not the zero for zero tariffs approach. What we are seeing is that this is sort of in tune for the larger BTA that US wants to address this trade imbalance that it has with India. India is at a much higher. India is at a trade surplus of north of $40 billion with the US, and the US sees that as unfair. It wants to repair this relationship and get on some sort of an equal footing. That is it for now, and we will continue tracking this.
Okay, well, thank you, Rishabh, for those key insights on what this could mean for India. But Asta, let me come to you on this announcement that we are looking at, that India proposing zero tariffs on steel, auto parts and pharma. With this kind of a consideration on these zero tariffs that we are looking at in terms of reciprocals, what is your implication for these sectors?
I think right now we are seeing the implications, and we believe that it might, show some sort of negative momentum in the sector as of now. But in the longer term, I believe that definitely it will going to recover. So it is a short-term phenomena which we believe, as today we have seen that the pharma sector is also taking a knock on that part of the news. But in the longer term, we believe that definitely the kind of demand we will be getting, because the kind of macro situation is going on right now. So definitely the companies will be able to show good financial performance. Although I know industry will be impacted by this action, but in the longer term, I think there will be not a major impact.
Okay, so that's the view with regards to where these three sectors fare, that is your pharma, your auto components. Now, in terms of the next caller that we have, Kiran is calling in from Hyderabad. Kiran, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Coforge.
Okay.
So I'm holding 50 shares of Coforge.
Okay.
At 7660.
Okay.
For a short term, should I switch to some other company or should I stick with the Coforge is my query, ma'am.
Okay,
should I
gotcha.
shift to some other company like Persistent or Infosys, or should I stick to Coforge is my query, ma'am.
Okay, got your point, Kiran. I'll take this up with Swati. Swati, Coforge did come out with its earnings, yesterday. In terms of numbers, they were largely in line, but the commentary coming in was very strong. Even in terms of the revenue growth, in terms of constant currency, that was strong at 3.3%. Organic growth of FY26 would exceed FY25 is what the management has said. And this has not been the case for a lot of IT companies. This is with respect to a fundamental stand, but what do the charts indicate right now for Coforge? Does Kiran stay invested in this particular counter, or should he shift to something like a Persistent or Infosys is his question?
On the technical front, definitely this is the one of the strong counter from the IT bank. No wonder after a very good kind of a result, we are witnessing a profit because all those news has already discounted into the price. That's why today we are witnessing some sort of a profit bookings at 8,000 odd levels, and we have seen a sharp correction on the profit bookings on the higher sides. But overall setup is definitely positive. I believe if you hold for at least 3 to 6 months duration time, you will get to see the target of at least 8,400 to 8,500 on the higher sides. I will suggest to hold on this particular counter if you want any strict stop losses on the downside. 7,400 will act as a crucial support levels. I will suggest to hold on this particular counter. If you want to add on one more counters from the IT pack, TechM really looks very good. As of now, we are witnessing very strong consolidation about the 50 days moving averages, and probably in the near term future, we are likely to witness at least a very strong momentum towards 200-day moving average, which will take a stock towards 1600, and so the risk reward ratio is really favorable at the CMP. So you can add on this particular counter if you're looking for the IT pack. But for the Coforge, it's a short-term profit booking we are witnessing, but over a period of time, definitely positive momentum can be continued in this particular stock.
Okay, so well, that's the outlook that we are seeing for Coforge and overall IT sector as well. But next we have a caller joining us, and this is Ajay from Ambala. Hi Ajay, हम आपकी कैसी मदद कर सकते हैं शो पे?
Yeah, good morning ma'am. Good morning ma'am. मैम मेरा क्वेश्चन L&T के रिगार्डिंग है. एक्चुअली इसका 8 मई को रिजल्ट आने वाला है. इन पॉइंट ऑफ व्यू मैंने 3324 पे 200 शेयर्स बाई किए हैं. एक्चुअली कुछ आप लोगों का ब्रोकिंग कॉल भी आया हुआ था कि बहुत अच्छे रिजल्ट आएंगे, तो पॉइंट ऑफ व्यू से लिए थे. क्या मुझे इसको होल्ड करना चाहिए 8-9 रिजल्ट पॉइंट ऑफ व्यू से? तो
आप ये शॉर्ट टर्म के लिए होल्ड करना चाहते हो रिजल्ट में रिएक्शन देख के?
मैंने आज ही लिया है. यस, टुडे आई गॉट इट. मैंने आज ही खरीदा है. मैंने मुझे रिजल्ट 8 मई को आएगा, तो सब कह रहे थे बहुत शानदार रिजल्ट आएगा, इसलिए मैंने ले लिया. तो अब होल्ड करूँ कि आप बता सकते तो?
Okay, so let me take this query to Swati. Swati, you want to understand your outlook on L&T. L&T is in focus on the back of its earnings. What are the key expectations that we are looking at? The overall, if you can get an outlook on this one.
Yeah, on the technical front, as of now, we are witnessing some sort of a correction in this particular counter. Though under the result expectations are good, but already we have seen a momentum in the month of the April. It's from lower levels to almost 3,000 to 3,300 levels. Now it is struggling at the resistance levels of 3,400. If we look towards the past 3 to 4 trading session data, the stock is not able to give the breakout of 3,400 levels on the closing basis, and it's just hovering near its 20 DMA. So which is little bit cautious sign if you're looking from the trader perspective, as a trading perspective. I would suggest to maintain the strict stop loss of 30 to 80 levels on the downside and hold on your long positions. Positive momentum can be seen once the stock manages to give a breakout of 3,380, 3,400 levels on the higher side. Then definitely we can see the very sharp uptick rally towards the 3,500 line. So as of now, it is in a consolidation phase. You can hold on your counters, but with the maintain a strict stop loss if you're looking from a trading point of view.
Okay, so hold is what we are looking in terms of whether technicals are concerned. But Asta, let me come to you also. Strong expectations that we are seeing for the quarter. What's your assessment for L&T?
So we believe that yes, here the investor is absolutely right because we believe the company will going to post very strong bottom line growth in the results which will be going to come in, and we believe that net profit which we are expecting it to grow by 10%. So I believe that is a decent growth which we believe this company will be posting, and the major reason behind this kind of a growth is the good and the strong order inflow which this company is witnessing. So idea here is to yes, definitely one can make a fresh entry also, or if anyone has this stock in the portfolio, they can remain invested in. But fresh entry I would recommend at lower levels of around 3,300 or so. But yes, we believe that results will definitely going to come in strong, and on that basis one can put a bid on this stock.
Okay, strong results expected for L&T, and one can bid on the stock is the view coming in from Astha on L&T. All right, the next question is a very interesting one, Astha. Reshma Bhatia is writing in, and she had a general query with regards to the current disturbed scenario between India and Pakistan. Should this escalate and move to the next level, would our stock market see correction, is her question. And if they see correction, what should be the next course of action? Now, it's interesting because, our research team did pull out the data and see that generally in war-like situation, the average correction is around 3% and the investors follow a 65, 35 and a 20 strategy in terms of allocation as well. Your view, Asa, with regards to what should one do in this kind of situation, and what should Reshma do? Should she also follow the 65, 35, 20 model?
In fact, in 1971, when we faced the war, then definitely the stock market momentum was not very much, disturbing even at that point of a time when the country was into the war. So what we believe that something which is always known to the markets react not very, badly on that news. Here, this is something which market can sense on the kind of news flow which is coming in. So I think markets will not react that very, badly on this kind of situation. Yes, definitely it will. Whenever it will happen, it will nervous the market. Maybe the markets will fall for some, percentage point also. But I think in the longer term, it will not impact very much, capital markets. Now, what one should do? Yes, one can definitely allocate, not the entire amount or the lump sum investment they want to make. Then it is not the right time. This is what even we also agree on. So yes, even 65 to 25 and 35, whatever the strategy is, yes, one can follow that. In fact, I would recommend that 30% investment, 30 to 40% investment can be made at the current point of a time, and the remaining 60%, this is what our strategy is, which we are recommending to our clients as well, that remaining 60% or 50% should be allocated at the later stages when the things will get, clear.
Well, quite an interesting outlook right there, Astha. So this is what one should be prepared for in case there's an escalation in the geopolitical situation that we are looking at. But next we have caller joining us, and this is Naveen from Telangana calling us. Hi Naveen, how can we help you on the show today?
Hi ma'am, good morning.
Good morning.
Ma'am, my question is regarding CDSL and Apple India. It's right time to buy, ma'am, those stocks. I wanted to invest 1 lakh in each.
Naveen, any particular reason that you're planning to enter in these two counters?
Ma'am, actually in India, the demat accounts are growing day by day, right? So
Right.
that's why the business is going to good.
Okay, so let me take this across to Astha. Astha, what's your view on CDSL? Now, he's talked about the growing demand of demat accounts as something that should be focused on. Is this the right time to enter this counter?
So if we talk about CDSL, I think one can wait for some more dips to come in and that make an entry into this counter. So I don't believe that it is the right time to make a fresh entry into this counter. The reason being we are seeing some sort of nervousness in the market. So yes, these market-related stocks may behave, not very positively in the coming few days. So we can expect some more downturn to come into these stocks. So that can be the better level to make a fresh entry into. Maybe it is putting at around 1290. So maybe at 1250 or 1260 odd level, CDSL is a good buy.
That's the view with regards to where CDSL stands. Our next question is from Satyan here. He's writing in to ask about Ethos Limited. He's saying that despite of the good performance, the stock has not been reacting very well. He's bought a few shares at 2,500 levels and wants to know as to what should be the next course of action for this particular counter, and if he wants to add an average out, what should be the right level. As I'll again come back to you on this one, Ethos did post a good set of numbers, but working capital concerns were an overhang overall on the counter. What's the view like, and should he add more to average out?
I believe that the results were good. And in fact, the company have added 1 new boutiques and 14 total new boutiques, which we can say in FY25. So very robust performance, which this company has delivered. In fact, in the revenue also, 23% of growth was there. EBITDA was also very strong. Yes, the results were good. In fact, right now, I believe that one major point is about the valuations also, because it is quoting at a high price to earning valuation of more than 30-40 price to earning multiples. So that is one of the issue which I find that is a negative for the stock prices. So here, if anyone wants to average, I believe averaging at the lower level of around, I should say around 2407 it is coming. So 2340 or 2350 are the good levels to average this counter rather than current point of time.
Okay, so that's the view with regards to where Ethos stands. But with that, it's time to slip into a very short break, but we'll be right back. On the other side, an interesting conversation lined up for you. Puneet Chartwal of IHCL will be joining us. So stay tuned. We'll be right back.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have 2 credible credit rating agencies on March 4th coming and downgrading the
Earnings focus on a stock that has been the streets darling for quite some time. Indian hotels on their Q4 numbers. It's been a robust quarter for them. Revenues up 27.3% year on year. EBITDA is up 30%. Margins are at staying steady at 35.3%. In fact, an improvement, and net profits up 25%. Stock seeing a bit of weakness because a lot of the good news priced in, and their guidance for their pipeline has been lowered as well. We're going to talk about all this and more with Puneet Chhatwal joining us now, MD and CEO of Indian Hotels. Mr. Chhatwal, always a pleasure to speak with you here at NDTV Profit. Thank you for your time. Seems like a stellar quarter boosted by a lot of events, and this is traditionally a good quarter, isn't it?
Yeah, it's the second best quarter. So Q3 was, is, and will remain the best quarter, and Q4 is the second best. We are in all very pleased, not just with the Q4, the way the Q1 has started, and the outlook for the year also remains pretty positive.
Let's go into a bit of detail on the quarter gone by before we get to the guidance, etc. You've seen room night sales increase, and RevPAR has also risen 16%. Just trying to get a sense of how much this was boosted, not just by seasonality, but large events. You had the Kumbh Mela, Coldplay, etc. Something that the street had priced in. But if you can get an estimate of how much impact these events actually have on the balance sheet.
Not Tamanna, it's not really just the Kumbh Mela or Coldplay. I think India is changing, and these changes you will see every quarter, especially if you look at, just recently concluded Waves event in Mumbai, or you had the delegations from Africa, the president of Angola in Delhi, or you had an event in Bharat Mandapam. There was no Bharat Mandapam, there was no Yashobhumi, there was no Jio a few years ago. So all that is really adding to the demand being generated in this sector. And when you add events like Coldplay in DY Patil or in Ahmedabad, or you add a Kumbh kind of traffic to it, then all in all it gives an upsurge in demand, which we have not seen before. But there's nothing suggesting that this trend is not going to continue, because especially the events venues of Bharat Mandapam and Yashobhumi are really in their infancy phase, and they are going to grow the traffic immensely, especially in Delhi and NCR.
Let's look at the outlook for the next fisc. And, are you seeing margins maintaining at this robust 35% kind of a space, Mr. Chhatwal?
Yeah, the margin is a result or a consequence of several initiatives that we have taken. Number one is the portfolio mix and the change in the business model. So the portfolio mix comes both through the different brands positioned in different price points and addressing different needs and wants. At the same time, the change in the business model being that we are more focused on the capital light model without losing sight of selective additions through capital heavy in newer markets, which offer a very compelling proposition to invest or create iconic statements for the brand. So when we work like that, then with the focus also on the newer businesses, then the margin gets to the level where it got to with 5 years of working in that direction. Now we have to do anything that we can and all the initiatives that we have taken to take them to the next level to maintain it around 33 to 37%, depending on various other things happening in the market.
And let me talk a bit about those various other things, because that, sometimes you say the devil lies in the detail. The guidance for pipeline being reduced by timings of approval and conversion, etc. Can you elaborate on that point, please?
I don't know where that came from, Tamanna. We have 130 hotels in pipeline. We had committed to open 24. We opened 26, and now we have given the guidance to open 30 hotels this year, and hopefully we'll do 32 or 33. There is no slowing down either on signings or on openings. So With 130 hotels in pipeline, we remain confident that we'll keep opening 30 to 40 hotels every financial for the next 3 to 4 years, even if we stop signing new contracts today, which we are not doing, of course, but that's to give that guidance. So I don't know from where that misunderstanding has come from. Our growth is a very important part of our strategy. Growth in brands, growth in number of hotels, growth in number of destinations, and growth in the number of rooms. So that is going to continue. And you know that we have added almost 200 hotels in the last 5 years, either in development or in operation. And we don't see any change on that front. And under our Accelerate 2030 strategy, we have given a guidance of getting to 700 hotels. There is no change on that front either.
So this is an important point to reiterate because this has been a concern in the commentary since morning. I think picking up maybe from statements in the conference call and then analyst notes out there, coming to this conclusion. So I know you've clarified, but we will reiterate it, that there is absolutely no change in the number of hotels, new properties, no change in the pipeline in terms of what you expect to happen compared to what you have said in Q3. Am I correct?
Yes, thank you for doing that. I was not aware that maybe we said something in the call, but it was more related to company-owned projects where there may be a delay, like a bandstand. We expect to start at the end of the year, but we are looking for a CRZ approval and a additional height approval to 165 meters. Now, there could be a little delay here or there on that kind of project, but normally we have enough projects in pipeline and enough openings that already in the first 35 days of this financial, we have opened 4 new hotels. So there's no slowing down in terms of openings.
Perfect. So these particular projects that you're talking about, what percentage of the entire, number of projects would that be, which have the CRZ regulations, etc.?
That's just the one-off that I know of, but it's a mega project. It's like building the next icon for India, just like Jamshedji built the Taj Mahal Palace and Tower in Colaba, or the Taj Palace in Colaba in 1903. The bandstand would be the next iconic asset for the nation, not just for our brand or for the group.
Brilliant. So this is essentially one mega project in bandstand, and this is, somehow the interpretation maybe incorrectly seems to have extended to everything else. So nothing else changes, the capital light asset model continues, and that focus continues. Do you see any headwinds at all with what is happening geopolitically? Because that is one backdrop concern, and not for IHCL, for the space and sector. If there are trade tensions, if there is war in the region, then that's bad news for hospitality.
That's very true. There is always headwinds. We should always, as management, be prepared for any kind of headwinds and try to navigate through those. So there are currently a lot of discussions on what could happen. But as we speak and as we see the performance with the business on the books and the first month of this financial, it's very strong, robust growth at the moment, even higher than last year, because the base effect is such with the heat wave that we had last year in April and the code of conduct for the months of April and May because of the elections. The growth actually is much higher this financial than it was last year.
Interesting. Q1 will probably be even better because of the base effect of heat wave, etc. last year. So that's to keep in mind. In terms, and this is something that we've discussed quarter on quarter, Mr. Chhatwal, so would like your view on this return of foreign tourists. You've said time and again that the focus is domestic and there's enough travel and appetite within India that we've been seeing. But that imminent return of foreign tourists, is that now happening? Are you seeing that beginning to pick up?
It's picked up, but not good enough. The pickup is not good enough to say that we are growing on the pre-COVID by 10 or 20 or 30%. A lot of work is going on and more needs to be done by the hotel companies, by the travel companies, and by the government in marketing our destinations. But the positive on that is that the tourist part may not be coming, but the business houses of various international organizations that are either already present in India or seeking presence in India are coming in good numbers, and that is helping in the statistics. But if we start getting the high-paying foreign tourist also, as of this financial year, it would definitely help our portfolio, especially with the palaces that we have in Rajasthan.
Okay, that's very heartening to know. Just, one last question as an aside, because all of this narrative and talk about Goa, a prime destination, losing its sheen, and there would be no one better to know the pulse of this place than you, Mr. Chatwal. Are you seeing anything flickering there in terms of demand for Goa?
It's a very valid point. Goa went up tremendously during COVID and in the previous 10 or 11 quarters. So you're seeing some kind of stagnation out there in terms of occupancies and rates, even for our brands. And there is a slight dip, a very slight dip. But overall, I don't see Goa dipping. Goa will go from strength to strength like the other key markets in India. This is very temporary just because it had gone up so high. And also, a lot of people made a lot of trips to Goa. There are other new destinations coming up. So people need to try something different, which is good for us, which is good for our brands. And I personally don't see any challenges for the Goan market over mid to long term.
One last bit, what are going to be the big highlights for FY26? Since, we've already embarked on it, but since we're talking about the financial year going by, what in your view are going to be, the big headliners as far as IHCL is concerned in FY26?
Let me talk a bit about the sector. I think the big headlines will be that when everything was not doing so well, tourism and hospitality contributed much higher than anybody thought to the nation's GDP, as well as in terms of job creation, including skilling of the young population so that they are more future ready.
Fantastic. Thank you so much, Mr. Chatwal. Always a pleasure to chat with you here on NDTV Profit, and best of luck for FY26.
Thank you. Thank you for having me. Thank you.
Thank you. All right, so that was Indian Hotels. I think that clarification is important, Mahima and Anushi, because when he's talking about a delay in pipeline guidance, it's largely just one project in Bandra Bandstand, for those of you who know Mumbai. And they've picked up that iconic property there, and they're going to redo it again. They already have one property there as well.
Correct. And plus their guidance also remains as it was in terms of revenue. They have said that they'll do double digit in FY26, and they've maintained that kind of guidance. And plus they've also said that they will be investing approximately 1,200 odd crores in probably upgrading the current assets that they have, new projects, plus the overall digital tools, as well as Taj as a brand. So that's the view and the holistic view with regards to where Indian hotels stand. Let's take up our next query. Chandrasekhar from Hyderabad is calling in. Chandrasekhar, a very good morning to you. How can we help you?
Hi, good morning.
Good morning.
My query is regarding SBI Bank. Actually, I thought of holding one banking stock in my portfolio. As part of that, I bought that SBI.
Okay.
I bought at an average price of 821.
Okay.
I have 20 shares in my portfolio. And now, after seeing the results and future guidelines, I thought to change that SBI Bank to any other bank. Actually, I thought like Axis Bank or ICICI Bank. Is there view on whether to change, whether I need to change to any other bank, or should I stay with the SBI Bank?
Okay. Okay, got your point, Chandrasekhar. Just wanted to know if you want to hold this particular counter from a longer term perspective or a shorter term perspective.
Yes, I want to hold for more than 5 years.
More than 5 years. Okay, interesting there. All right, then I'll take this up with Asta. Asta, your view with regards to where SBI stands. It came out with its earnings. And yesterday, we were discussing that the growth guidance overall for SBI has been downgraded. Margins are also expected to remain under pressure. But your sense as to how FY25 has panned out for SBI, and can Chandrasekhar continue to hold this counter for the next 5 years or not?
Definitely for next 5 years, yes, he can continue to hold this counter. Now, talking about the results, we all know that whatever guidance company has given, especially for the advanced growth, which is the key parameter for any bank to get analyzed, is lower. I mean, they have shown the growth of around 12% year-on-year advances growth, but I think that was lower than guidance. NIM was in line with the guidance, but I believe the profitability was mainly high on account of the high treasury gain which the bank has shown. So overall, on that basis, we believe that maybe coming 1 or 2 quarters will not be that very strong for the bank. But here the time horizon is for 5 years, then why not? Remain invested in this counter for 5 years, but maybe the coming 2 to 3 months can be a volatile sessions for this counter. So be ready for that. But in the longer term, this bank is poised to show good returns. However, in the medium term or short term, our targets are 850 or so.
Okay, so that's the view that we are seeing for SBI. 2-3 months of volatility expected, but overall an optimistic outlook for the next 5 years or so. The next query is from E. Venkataraman, and he has accumulated 110 shares of Sun Pharma Advanced Research, and this is at an average price of 225 that we are looking at. Presently, the share is trading at a price of 144. So he's facing a loss of around 35% here. Wants to understand what should be his outlook currently. He's ready to hold for another 1 year. Asta, let me come to you on this one. You track this counter. What's your view for this one?
So for Sun Pharma Advanced Research, right now 144 is the price which it is quoting. But we believe that this counter may remain pressured for some more time, may remain in pressure for some more time. So outlook here is not very much optimistic for the coming few months. So if one has a patience to hold it for a longer term, that is for some months, maybe 6 months or more, then definitely one can remain invested.
That's with regards to where Sun Pharma Advanced stands. Our next question is on VIP Industries. Do we have the name? Yes, Rudra has been holding it and wants to know as to what's the course of action for the next 6 months for this particular counter. Swati, I'll come to you on this one. Are the charts attractive enough to enter something like a VIP Industry right now? Swati, I think you're on mute.
I'm really sorry. Year 2024 was not very good for this particular stock. We have seen a very strong correction from almost 500 levels to downside at least 200 to 50 levels up to that level. We have seen a sort of correction. Now the counter is trading in an oversold zone, which indicates that the downside is very limited, but definitely we are likely to witness some sort of a recovery or say the positive pullback rally towards at least 400 levels, which are the swing resistance provided by the previous levels. So I believe yes, upside can be seen at least 70-80 points upside levels can be seen in this particular stocks towards to 400 levels. One should not book their losses at the current market price. You can definitely hold on. If you're looking for at least 6 to 7 months duration, you can hold on this particular counter for a target of 400 levels.
Okay, so that's the view with regards to where VIP Industry stands. Our next caller, Vikas, is calling in from Hyderabad. Vikas, a very good morning to you. I believe you have a query on Kalyan Jewellers. Hi Vikas, can you hear me? Okay, we seem to have lost the caller, but we do have his query. His query is on Kalyan Jewellers. He's bought 300 odd shares at 516 a piece. So I believe this is a very recent buying and probably wants to know as to what do the charts indicate for this particular counter. Swati, I'll again come to you on this one. In terms of the kind of downfall the stock is seen since January is quite significant. Before that, the momentum in this particular counter was very strong. But do you think that the momentum for this particular counter is back, or there's still more downside?
If we look on a larger degree, say monthly or the weekly Myanmar, the stock is under the consolidation phase. If we look towards the weekly line chart, we can see that the stock is under formation of the inverse head and shoulder pattern formation. It's currently underforming the right shoulder of that particular patterns. I believe slowly and steadily we will gain some strong momentum in this particular counter. Upside, it is facing a resistance of 530, 540 levels on the closing basis. No wonder on intraday basis we get some ticks, but we need a closing basis breakouts. Any momentum above 530 levels on the high side will open a door for a next levels to 600 to 640. So the overall setup is still positive in this particular stock. One should definitely hold on to their long positions if you're looking for any kind of a trailing stop losses downside. 480 is the very crucial support levels. So by keeping that stop loss, you can hold on the long positions for immediate target of 570 and 600 levels on the high side.
Okay, that's the view that we are seeing for Kalyan Jewelers. Next is a very interesting query that we are seeing, and this is from Venkatesh Vardu. His query is on Hindustan Aeronautics Limited. He's been holding the shares at a price of 595. So we are seeing around a 10x jump from the levels that he's holding it. He's been a long-term investor. We're seeing 95,000 of a profit on this. Wants to understand whether he should continue to hold on this counter or exit from this counter. Asta, let me come to you on this one. Long-term prospects of something like a HAL. Now we have seen a couple of brokerages, the long-term concerns which were there before now easing out. This was related to the supply side that we are seeing. Defense outlook also on the positive side along with the order book prospects which are there. What's your view on HAL?
Yes, definitely long-term outlook is very, very positive for this counter. On the back of a strong order book, they are having the kind of order inflow which they are witnessing right now. I think they'll definitely give a good revenue visibility for coming 1 or 2 years. So yes, the idea here is to remain invested in this counter. Price target which we would like to attribute to this counter is around 5,000 to 5,100 odd levels.
So that's the view with regards to where HAL stands. Our next question, in fact, it's a caller. Ishwar is calling in from Andhra Pradesh. Ishwar, a very good morning to you. How can we help you?
Yeah, very good morning. I recently purchased M&M shares at 2980.
Okay.
Yeah, I am a short-term investor, so my goal is to sell these shares by the end of this week or by end of this month.
Got it.
So, yeah, what is the target price for this end of this week or maybe for the end of this month, like that?
Okay, so got your point, Ishwar. I'll take this up with Swati. Swati, in terms of M&M, in terms of earnings, well, the management commentary was pretty positive, and on the back of that, there are brokerages which have upgraded the stock with its rating as well. But with regards to a technical stand, what does the 1 week chart indicate?
Yes, you have rightly pointed out, Mahima. After the listening to the comments of the company, definitely the targets has been trying, and I believe that the stock has shown a very strong momentum rally in the last 2 trading sessions. No wonder, due to the market corrections today, we are getting some sort of a hit at the higher levels. But yes, this counter has a strong potential to reach up to the all-time high, which comes to nearby 3270, 3260 levels. That levels definitely we are looking for a target in a short period of a time. You can hold on your long positions if you want to keep any strict stop losses. 3000 is acting as a very good support levels. Why I'm quoting 3000 levels? Because on a daily chart, the stock has given the formation of the flag pattern, and that is the support level we are witnessing of that flag body. So as long as this particular counter maintains the 3000 psychological mark, upside can be seen towards 3270, 3280 levels on the higher side. So very soon we will like to witness some sort of a new highs in this particular stock. So it's all from my end.
Okay, M&M has been in focus after it has reported a robust set of Q4 numbers that we've been looking at. But next we have a caller joining us, and this is Swaminathan from Bengaluru calling us. Hi Swaminathan, how can we help you on the show today? I believe there's some, yeah, please go ahead with your query.
Yeah, my query is regarding Adani Enterprises.
Yes, how many shares have you bought at what price? Can you give us more details on that?
I have purchased 100 shares at 2,300.
Right.
And I just wanted to know the long-term view on that.
Okay, so you want to understand the long-term view on Adani Enterprises. Asta, let me come to you on this one. What's your view on Adani Enterprises?
So looking after the results were still, they need to pick up some sort of speed, because what we have seen, the results were not that very encouraging. But I think going ahead, definitely the kind of performance which we have seen in the top line definitely will help the company in posting good, strong bottom line as well as the operating level growth. So overall, my view is positive on this counter for a longer term horizon, not in the shorter term, maybe, because in the shorter term results impact will definitely be there on the stock prices, and maybe they can move more downside from here. But in the longer term, one can remain invested in the counter. Initial price target is 2450.
Okay, so that's the view with regards to where Adani Enterprises stands. Quick disclaimer, Adani Enterprises is also a part of the Adani group of companies, and NDTV Profit, owned by the Adani Media Group, is also a part of the same group of companies. All right, it's time for the rapid fire segment now. Astha and Swati, you both know the drill. We'll try to throw as many questions as possible at you and try to answer them as quickly as you can. All right, the first question is from Rajiv, who is writing in from Mumbai and wants to know an outlook for Unicommerce e-solutions for the next 12 months. What's the view like, Astha?
outlook is positive for the e-commerce, and for the next few months, we are giving the price target of 160.
Okay, next question is from Tammy Salvan, and he wants to understand Dr. Lal Labs' technical outlook. What is the current prices that he should be holding out for? Swati, what's your view on this?
I'm looking for a target of 3000 level. The stock is well placed above the all-time bottom moving averages, so you can hold on by keeping a strict stop loss of 2700 levels. 3000 levels can be seen very soon.
Okay, Satish is asking the next question. He's holding 100 shares of JSW Energy at 530 a piece. What are the charts indicating, Swati?
The JSW Energy, as of now, we are witnessing a selling pressure. So I will suggest to book your profits or exit your long positions on FD rise towards to 510 levels. So any momentum below 465 levels, we are likely to witness the selling pressure, which will drag this particular stocks towards to 450 to 400. So view is little bit cautious. Try to exit on FD rise.
Okay, Mahalakshmi is writing to us that she's holding 400 shares of ITC Hotels, whether she should continue to hold this or shift to something like IHCL. Asta, your view?
I think ITC Hotel is a good choice to stay invested in with a price target of 210.
Okay, Kaushik from Kolkata is writing and wants your view, Asta, on Tejas Networks. Should he continue holding it for the next 3 years?
For next 3 years, yes, definitely he can hold this counter, but in the immediate term, maybe some sort of volatile moves can be seen because the results were not up to the mark.
Okay, next question is from Suman Kumar, who wants to understand the outlook for Bharat Dynamics holding at a price of 1,528. Swati, your view?
My view is positive, but on the technical front, the stock is trading in the overbought zone. So we might witness some sort of a selling pressure for a short-term period of time. Definitely, we are likely to witness some hit, which might drag a counter towards to 1400 and 100 levels and so. But for long-term period, definitely it's a hold. We are looking for a target of 1700 on the high side.
Okay, so that's the view with regards to where Bharat Dynamics stand. With that, we're completely out of time with this edition of Ask Profit. Astha, Swati, as always, thank you so much for taking us throughout the show and giving us all those insights. All right, as I mentioned, it's a wrap on this edition of Ask Profit, but know your company on the other side. So stay tuned to NDTV Profit. We'll be right back.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Apollo ties. Now there's a buzz of a positive corporate development related to related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Jaggi brothers. What did the money buy? Not even